everyone. I'm Chantal Allam, the News and Observer's real estate journalist. Thank you for joining us today for our first ever On the Market live Q&A. Today, we'll be talking about first-time homebuyers in the Triangle. We've got two local real estate experts with us here today. They'll be answering your questions in real time about the current state of the Triangle housing market. But before I introduce them, some background. This event is part of a series that we recently published about first-time buyers wading back into the market this spring. You can find the links to the stories in the chat. We wanted to know, with mortgage rates and home prices rising, who can afford a starter home in the Triangle today? In my reporting, I tagged along with some first-time buyers on house tours, and I found that many are struggling to find options in their budget. They also face stiff competition. To get a better picture of what's happening on the ground, I'll be joined by Tammy Harris. She's the owner of the Tammy Harris real estate firm and has worked in the industry for the last 17 years. Our other guest is April Russell. She's a mortgage loan officer with Movement Mortgage and is also based in Raleigh. Thank you so much for being here today.
Thank you for having us.
Thank you.
Readers, if you're joining us on Facebook, please message us your questions. I will see them and pose them to our guests. So let's dive in. Tammy, how are you doing today?
I am super good. Just excited to be here with you and April.
Good. So to start us off with, as we start getting readers' questions, can you just give us the lay of the land? What is the Triangle housing market looking like right now?
I tell you, Chantal, it's an interesting market right now. But the good thing about the market is it's ever flowing. It's ebbs and flow. And so what I'm saying to people, don't get discouraged about the market. Jump in where you fit in and make sure that you connect with folks that can really take great care of you.
April, what about you? What are you seeing?
I am seeing that maybe some buyers are getting discouraged, like you mentioned, interest rates and things like that. But again, I agree with Tammy. Let's talk with some professionals and let's get in where you fit in. This is a great market to be in. The Triangle area is a great place to live. And of course, home prices are not going to go down. So if you can purchase a home today, you absolutely should.
So just to get some background, about a year ago, interest rates started to rise. And that's after house prices in the Triangle skyrocketed by like 22%. And so at the time, people told me that many of the first-time buyers were sidelined at the time. Are they starting to come back this spring?
Yes, they are. First-time home buyers are definitely coming back into the market now. I think a lot of what we saw before with kind of during COVID is, of course, in the state of North Carolina, you have due diligence. So you were seeing homes going for over their asking price. You were seeing very large due diligence being paid and offered with purchasing a home. So now things have started to more so turn in a first-time home buyer's favor in terms of due diligence is down now. There's not as much competition out there, although there is some. I will say it's still, and of course you have to understand Raleigh's considered, number one, number two real estate market in the country right now. So, but it's definitely opening back up for first-time home buyers. I am seeing them come back in now. And of course they're finding ways to actually get in at this point, where I think they may have felt totally shut off before during COVID, unless they had an extreme amount of money saved for due diligence.
So can you kind of tell me what it's like, the competition, what they're facing? And what is the typical price point of a first-time buyer?
Typical price point, generally, I would say maybe about $350 or less, just to kind of, give a general idea. As far as what they're facing right now, obviously, everyone's talking about interest rates. That's what they're facing. So ultimately, $350 2 years ago versus $350 today, of course, with the change in interest rates, you do have a slightly higher payment. However, again, and I cannot stress this enough, if you can afford to buy a home today, you should buy a home. Home prices will continue to increase. So you need to just get in where you can. But yes, it is looking better for first-time home buyers now in terms of them being able to get into the market.
What's the inventory looking like, Tammy?
So, the inventory, like April said, we're seeing it a lot better than what it was because we had, think about our area. We have so many large corporations coming here with big salaries. So where the first time home buyer had a whole lot to choose from before, they didn't have a lot in the recent, 18 months, right? But because the interest rates have went up some, and we still have sellers that are trying to relocate for job purposes, we're seeing more homes coming on the market. So we have more inventory now than we had, 24 months ago, 18 to 24 months ago. And one of the things that I always say, the value of, and April keeps saying it, if you all can hear her, people say, well, the interest rates are too high. I don't want to buy a house. I'm going to wait. The thing about our market that we're saying, Chantal, the housing prices are going up. So if they wait for the interest rate to go down, the housing market is going to be a lot higher, and they're still going to be in a similar or worse, possibly, case scenario. So homes are coming back on the market slowly but surely, but inventory is way better than it was in the last 18 to 24 months.
So what kind of advice do you give to home buyers that are looking at that 250, 300,000 price point?
Yeah, so what I say, I kind of talk about my own story. I'm really transparent. I tell people, I know you want a $500,000 house, right? But you're a first-time home buyer. So get pre-approved. If you fall in that $325,000, $350,000 range, start where you are. Typically, we don't see people staying in houses for 30 years. 15 years. People think that because they don't know. So I tell them, jump in where you fit in, get that first home. You can grow up. You can end up, selling that house and transferring the money that you make from that house to your next house. And I know because that's what I've done. And then the other thing I say to people is when they're talking about the interest rate, oh my God, the interest rate is like 6 whatever. I remember when my parents bought their first house, the interest rate was about 12%. Okay. And then when we saw the interest rate being 2 point, 3 point, really, was that a real rate that was going to be lasting? So I say to them, you are paying 100% in interest right now when you're renting. Think about it like that. You're paying 100% in interest because it's nowhere you're going to have an opportunity to recoup any of that money that you put into the landlord's pockets.
So you mentioned your own personal story. And I, during our interview for the package, you told me the story. Can you share it with some of our watchers, how you became a first-time homeowner?
Yeah, absolutely. As I shared, I grew up daughter of a sharecropper, really poor, didn't know home ownership, just didn't know it. And the first time I bought my first home, I was about 26 years old. I was newly married, and the house that I purchased was $89,000. Okay.
Where was that?
That was in Nash County in Sharpsburg, North Carolina. And it was a nice house. It was a 3-bedroom, 2-bath, a nice yard. It was a good area. I loved being there. But what I realized in purchasing, Chantal, I realized, oh my God, this is how it works. You buy one house and then you get a chance to move up to another house and you rent that house out and then you move up. And that's what I kept doing, moving up. Because in my mind, I was breaking generational curses as it related to generational wealth not being met in my family. And one of my coaches says all the time, and I was thinking this then, but I didn't know I was thinking this. A wealthy family I didn't come from a wealthy family, but a wealthy family would come from me. And so that gave me an opportunity amongst the children that we have. All of them have bought maybe about 6 houses amongst themselves. And these are my children and not just me. So I understand the power of home ownership.
And now that you mentioned the generational kind of gap and legacy, part of the series explored the statistic that the white home ownership gap is the largest it's been in a decade. I think it's 20 points separating white home ownership to African American home ownership. Why do you think that gap is so wide today?
Well, April, I'll let you take that and I'll pick it back off you.
Okay, so I'm all about going back in history to kind of look at things first, because when you think about an issue or a problem or something that you may be facing, what's the root of it or what's the base of it? So I go back to, mind you, we don't have to go all the way back to slavery or anything like that, but I will go back to 50s, 60s, where you had redlining. There were certain areas that African Americans could not purchase homes. You also had institutions who would not lend to African Americans as well. So when we talk about building generational wealth, we're behind in comparison to white America. So it's going to take some time for us to actually catch up to that. So that's one thing, or one reason why. I'll say another reason why too, which really all roads lead back to what I just said, but it's also a lack of education about home ownership. But you also have to remember, if you've never seen it before, you don't know that it's possible. And what you find in our African American community, a lot of us have never seen it before. Some of us are first generation homeowners. So you don't know what you don't know. And I think that plays a part in it. Credit, being financially savvy, those are things that were not taught to us or we weren't educated about. So I think all roads lead to education. We as African Americans need to know more about the homeownership process, but also we need to take into consideration the economics of it as well, and how that gap is there because there was, a very big head start there for white America in terms of home ownership.
And
Absolutely.
So your company, Movement Mortgage, actually started an initiative called Grab the Key. Can you tell us a little bit about that and how it got started?
Sure, absolutely. So Grab the Key, as Chantal said, is an initiative started by Movement Mortgage. It's nationwide. We're basically going from city to city, traveling and really educating home buyers about the home buying process. Grab the Key is geared toward the minority community. However, we're teaching home ownership to anyone who's willing to listen. But what we really want to do is just show that, hey, there's a lender out here that actually cares. We're boots on the ground, going out into the community to educate the African American community about home ownership. So it's a great initiative. We recently had a Raleigh event back in February. Tammy was a part of that with us and on the panel. It was a phenomenal event. We had over 125 people in attendance. It was really great, and a great way, again, that movement is showing that we're here and that we care and we want to do our part. We can't completely solve the problem on our own, but we do want to do our part in contributing and helping to build and increase that percentage of African American home ownership.
And you said credit is one of the biggest hurdles. Why is that?
Well, we haven't really been taught about credit. Just like in our community, we don't trust banks. Remember, there was a time we couldn't bank with certain banks. I can remember my mom is originally from Texas. She moved here. I grew up in Snow Hill, North Carolina, and she was the first African-American person to be hired by the bank at the time was Wachovia. She was the very first person to be hired there. And this was back in the 70s. But I can even remember her telling me stories of clients coming in who didn't even want her to touch their money. They didn't want her hand on it. I'm like, well, money's dirty, right? But, ultimately, back to to answer your question, as far as credit is concerned, we weren't taught about it. We don't trust banks, again, because there were times we couldn't. We put our money under the mattress. It's in a shoebox. We don't deposit our money. We may be afraid someone's going to take it. or for whatever reason. But it, again, leading back to education and letting people know, hey, that's not necessarily how it works with banks now. But has that been there prior to? Yes.
Mhm.
So for first-time home buyers who don't necessarily have good credit, what can they do?
The first thing I would tell them to do is to reach out to a lender. You can reach out to me, of course, if you would like, or just reach out to a lender that maybe it's someone that your family recommends, but have that conversation. Allow that loan officer to actually review your credit. So what happens a lot of times with credit, and some consumers may not realize this, there are different algorithms used to actually calculate your credit score. So some of these tools that we have out here that will provide you with a credit score is not actually giving you a mortgage credit score. Right. So a lot of times when I'm talking with a client, they're shocked when I tell them what their credit score is, because it's not the same, because it's a different algorithm. So generally what a consumer will see, and you have to keep in mind, I am not knocking any apps or tools that are out there, because they're just that. They're tools to assist and kind of give you a general idea of where your credit is. But ultimately, you need to reach out to a loan officer. Allow me to review your credit. Most loan officers can run what's called a score simulator and really tell you what it is that you need to do or what needs to be addressed on your credit so that you can get in position to get pre-approved for a loan. But you want to make sure that you are talking with and partnering with a lender that will actually take the time and take those steps with you.
Mm-hmm. And Tammy, you also said that to find success in this market, buyers need to be flexible and to be more open-minded about where they're looking. So what are some up and coming areas around the triangle where buyers can look and maybe find some deals?
Absolutely. And before I jump into that, Chantal, I did want to add, I was born in 1968, and the fair housing laws was passed and approved in 1968. That was 55 years ago. So before 1968, when I think about credit, when I think about understanding real estate, when I think about the market, and when I think about the wealth gap, and one of the things I said to you, even in the article, people say, well, if people just, pull themselves up by their bootstraps, well, what if they don't have any boots? And so when we think about the wealth gap, we think about the housing gap and other gaps and credit gaps and things of that nature. If in 1968, and the bill was only passed after Martin Luther King was assassinated, the bill had been on the table for a while, but it had not passed. And so when that happened, that's when it passed. That was only 55 years ago. So I wanted to say that. So when people are thinking about why don't people know what to do, it's because they don't know. But that's why you got April. That's why we have you who are, sharing this information, myself and other real estate agents and other professionals. So I definitely wanted to say that. One of the things I want to encourage people to do is get out of the box. When I first bought my first home, I lived in Rocky Mount, but I bought a home in Sharpsburg. So Sharpsburg was a sub community of Rocky Mount. You weren't in the heat of the city, but you were sort of like in the rural parts of the community. Same thing here. Your first time home buyer, you cannot live. No, you cannot live in North Hills. I was going to say cannot live in North Hills, but you can. You may not be able to purchase a home in Cary. You will not be able to Marsvilles and things like that. But think about some of the outskirts. We opened an office in Franklinton, North Carolina recently, and we see that more people are going out that way. Eventually, that's going to be a baby Cary. Think about parts of Selma. The young lady that you did the article on, she moved to Selma. Now she works in Marsville, but she got new construction as a first-time home buyer in her price point in Selma. We just closed another buyer who moved to Sims, North Carolina, but she got a magnificent home that she could not have gotten around the corner from Crabtree. So I want to say to people, think outside of the box. Do not feel like your first home is your forever home, and go on the outskirts a little bit. You could drive to your job. You don't have to live 20 minutes from your work.
Yes. And, and going back to the education part, I think a lot of first-time buyers think that they have to have 20% down to qualify to purchase a home. Is that true?
Absolutely not. That's one of the myths that I spend a lot of my time debunking, if I could say, and letting people know you don't need 20% down to purchase a home. There are 100% financing options out there, meaning no down payment. There's also down payment assistance programs as well. So, and even some loans require a minimum 3% or 3.5% down. So it can absolutely be done. And you can receive a gift. If your parents want to help you with purchasing your home, they can gift money to you to help you, or any family member for that matter. But there, you can use funds in your 401k if you have it. I have some clients tell me, well, my 401k is for my retirement. It absolutely is. And I don't want you to deplete it by any means. However, what is your 401k? An investment. What is your home? An investment. All you did was move your money from one place to the other. That's it. You didn't lose your money. It's still there.
And what about you, Tammy? What kind of advice would you give to first-time buyers who are kind of sitting on the sidelines, maybe think, because, I spoke to some first-time buyers who are sitting on the sidelines. They are hoping that interest rates will come down. They are seeing house prices kind of slowly coming down. And, many of them are worried about paying more than the house is worth.
If you think about where we live, April said it very well. We've been voted number 1, number 3, number 5 in the U.S. to live. We have Apple, Fuji. We have all these companies coming here. Well, listen, if you buy a home and it gets upside down, eventually it's going to come right back side up. And it's going to be way more than you even paid for. I mean, I think I shared one of my personal stories with you, and how we were amazed with the opportunity to get so much money from one of our sales, because the market was slow and then it came back up. So I want to say to people, anyone who's listening, I want to encourage you, don't be afraid. It's really fear. It's really fear of the unknown. It's fear because you don't know. You said it, Chantal. We don't know what we don't know. So you got to put yourself in circumstances where you learn, where you're listening, where you're growing, where you're jumping in on topics like this, where you're asking questions, and don't be afraid. And it's no stupid question as it relates to real estate. That's what we're here for, to serve our clients.
Mm-hmm. And so what is the starter home today? Is it a single family home, or is a starter home a townhome?
It has been a mixture. It used to be a single family home, but what I'm seeing now, townhomes are definitely a great route to go. But you got to look at the homeowners association. If you get a townhome that you love and it's only, $227, but your homeowners association is $300 a month, then you could have got a single family dwelling home without some of the rules and regulations of the association. But it can be a townhome, it can be a single family home, it can be a double wide built brick in mobile home. Homes look different things to different people. I'm seeing people buying tiny homes. So I think what people have to think about is, what is it that they want for themselves? And even with home ownership, no comparison. Stop comparing. Oh my goodness, well, my friend got a house that cost $500,000, so no need for me to invest in a $250,000 house, because it's not the same. I tell people, even in the market, don't compare yourself. Okay, it's just you. Why do you need a 5-bedroom house? It's just you and your child, or you and your 2 kids, or you and your husband and 1 child. Why do you need 4,000 square feet? Why not start out with possibly 1,200 and then move up to 5,000 eventually, if that's what you want?
Mm-hmm. And where do you guys see rates going? Do you see them coming down anytime soon?
It's predicted that they'll begin to trickle down some, but to say that we're going back to where they were during COVID, no, that is not going to happen. We may not ever see that in our lifetime. And we also have to understand that was not a normal market. That was a global pandemic that caused rates to be where they were. So will they begin to trickle down and level off at some point? Yes. So mortgage rates follow inflation. Inflation is starting to come down. Mortgage rates will start to trickle down. But you'll also notice inflation is coming down slowly, as will mortgage rates. So it will change, but I wouldn't say to anyone to be expecting rates to be in the threes again, in the high twos and threes. That is not realistic. I don't think anyone should expect that. And to also piggyback off of what Tammy was just saying, there's that quote that's out there: you don't wait to buy real estate, you buy real estate and wait. So for that person that's thinking, oh, I'm going to be upside down in my home, or I'm going to end up paying more than what it's worth, you are buying an appreciating asset. It is a home. It will gain value. And just like Tammy said, if for whatever reason it flips upside down, it'll flip right side up again. It will happen. So, and just think about it. If you're currently renting right now, if you purchase, you have time, you'll be building equity in your home. And that's what you will miss out on by being afraid that you're going to be paying too much, because someone else is going to pay. Investors are still buying homes today. Corporations are still buying homes today. Why shouldn't you buy a home today?
So if someone, let's say, doesn't have, we're running out of time soon, but for maybe one of the final questions, if someone doesn't have money for a down payment, what are some of their best options?
So there are, as I mentioned, down payment assistance programs. We do partner with the NC Housing Finance Agency that offers assistance. There are programs, City of Raleigh programs, Durham has programs as well. Also at Movement Mortgage, we have our own in-house down payment assistance program called Movement Boost. It actually offers 3.5% or 5% assistance to ultimately cover that down payment for a first-time home buyer. So there are options out there. Again, contact a lender and have the conversation.
And Tammy, what would be your kind of parting words to a first-time buyer sitting on the sidelines?
Get in the game. Get in the game. I think about my own life. If I would not have gotten in the game at 26, at almost 55 in July, I would not be where I am financially. Get in the game. Get off the sidelines. Trust the process. Connect with a professional agent, lender that will walk you through the process, and just do it afraid. I know you're nervous. I know you're concerned. I know you may be overwhelmed. Do it afraid, because that's what April and I did. We did it afraid, and now we're here.
Mm-hmm. Great. Well, thank you so much for joining me today for our first ever On the Market Facebook Q&A Live. Thank you to everyone who's watching. Please make sure to sign up for our newsletter On the Market, and join our Facebook group On the Market as well. So thank you, ladies, so much for joining me here today. I've learned so much, and please keep me posted, because I know the market is always changing, and I will definitely want your perspective on it.
Thank you, Chantal. You have been great.
Yes.
Bye, ladies.
Bye.